Since we aren't going to be using PowerPoints today, it's awkward to stand up, but it also seems weird to be sitting behind this desk. So I'm going to do what in Japan would be extremely uncouth, but in California you can kind of get away with it, and have Dan and I come and sit on the front of this desk. So we're sort of got a bar stool kind of thing going on with the front of the desk. And see if that doesn't sort of soften up the fields a little bit, give it kind of more of a casual fireside chat sort of feel. Okay, so now I'm feeling really guilty because my wife is Japanese, and you should be feeling guilty too. So I've presented once or twice here in the past and talked about how the Japanese entrepreneurship ecosystem is evolving. And in talking about SunBridge here, I'd mentioned that we had two goals at the beginning of the company. One was to prove that there was enough entrepreneurial activity in Japan and enough great businesses being formed that it was possible to produce world-class Silicon Valley-style returns running a VC fund there. That there's enough great companies being formed that you can do good investing in Tokyo. The second goal that we set when starting SunBridge in 2000 was that we wanted to be backing startups whose business didn't stop in Japan, who built companies that could compete effectively with their peers in Silicon Valley and eventually be the next generation of emergent Japanese global leaders. And as the first, we've had the opportunity to work with a lot of great companies in Japan, have had good investment returns, but until about 2 or 3 years ago, almost no new startups being formed in Japan were growing beyond Japan's borders. The market's big enough there that you can get quite big without taking on that more challenging issue of going overseas. We've had a couple of companies over the years that had the potential to go global but didn't execute on it for various reasons. In one case, because they were under pressure to go public very quickly and went public when they were still too small and couldn't grow. So for 12 years, I've been looking for, working with startups in Japan, hoping that at some point, one or two of them become really credible global players. So that's all kind of the setup for how I got to know Dan and his co-founder, Kato-san, Tetsuya Kato-san, when they started Midokura a couple of years ago. When they presented to me the software-defined networking space and why networking also would be virtualized just as CPUs and storage had been, I didn't get it. I'm not going to attempt to explain the SDN space here. That's what we've got Dan for. But for me, when they first approached me about possibly making an angel investment in the company shortly after it was formed, the thing that really captured my imagination about this company compared to anything else I'd seen in Tokyo in 12 years was the CEO at the time was Japanese, had a background in both technology and investing. Dan, I'll have you introduce yourself in a moment, but he's obviously not Japanese. I'll leave it at that and let him tell you a little more about himself later. Another co-founder in the team Dan worked with Amazon, another company had worked with Google here in the United States. And the team of, I think, 7 or 8 people at the time were all bilingual, whether they were foreigners who were native fluency in Japanese or Japanese with native fluency in English. I'd never met a team like this. And part of Kato-san, who at the time the company was founded, was working as the CEO. Part of his pitch to me was, we're trying to build a global company. And Silicon Valley companies go global, but they're all Indians at the start, or all Chinese, or all Americans, and they sell to companies in Silicon Valley for the first couple of years. They don't really start as global companies. They start as Silicon Valley companies that eventually grow global, and we're starting as a global company. So for me, I did not get the opportunity for about 6 months with the company. What I got was, here's a team that's unlike any other I've run into in Tokyo. This team really may have the potential, assuming that they are right about the technology opportunity they're pursuing. This is a team that could potentially go global. And so for the last 2 years, we've been working together and Dan's been ready to help me realize one of my dreams, of Japanese startups going global. And so for me, it's a special privilege today to be able to have him here at this forum in Stanford. And I'll share one more bit of news with you before turning the time to Dan to kind of introduce himself. But the reason he's here and able to do this today, instead of the gentleman, Ben, that runs the operations for them in the US, is that Always On picked Midokura as one of their 100 world-leading on-demand players and had him come out to receive recognition as one of the 100 most interesting cloud companies yesterday. So I thought that getting him to come here to Stanford was going to be kind of a special opportunity to get him in front of a crowd in Silicon Valley. He was in front of an even, with all due respect, more interesting crowd last night. So that's kind of the setup and how, for me, at the outset, the main thing that was really interesting about Midokura is a team in Tokyo composed of bilingual people from around the world pursuing a very, very hardcore technology that, as I got to understand it, if it becomes as big as it could be, is on the order of an industry creating along the lines like we talked about. It occurred to me that maybe the easiest way for me to understand it was that Midokura and companies like it are trying to become to Cisco what Microsoft was to IBM. It's to the proprietary, expensive networking gear companies, the software platform that makes it possible for a commodity off-the-shelf software to do everything that they can. So Midokura and the companies like them potentially, to the extent that I understand the opportunity, are maybe like maybe to Cisco, Juniper, and others what Microsoft was to IBM in the day. So Dan, came on to introduce yourself and kind of set the stage. Talk a little bit about software-defined networking. See if you can do a better job explaining to them than you and Kato-san did to me in that initial meeting of helping them understand the power and potential and the necessity for software-defined networking.
So first of all, thank you very much for having me here today. I'm quite honored to have this opportunity. I'm really not used to speaking in front of, I guess you're all business students or technology business students, and frankly speaking, I'm not sure if I can teach you anything at all, but maybe despite that, you can learn something from my experiences. So originally I'm a computer scientist. I graduated from Cornell actually, and I worked in a variety of startups, some in networking, not exactly like the Cisco type, more like application level. I worked in infrastructure at Amazon. I worked in financial services in New York. And about 3.5 years ago, I actually had this idea of going to Japan and starting a cloud computing business. And actually, despite everything that Alan said, I'm going to totally dash your presentation. Actually,
sure.
When I met Kato-san and we decided to start this business, our focus was actually very local. Initially. Yeah. It was actually on doing a service business locally in Japan. And so we built the company, and one of Kato-san's acquaintances is the CEO of a data center company in Tokyo. They had lots of the physical assets, networking, but none of the software expertise, let's say. So they actually put money into our company fairly early on to help them to build a cloud service, infrastructure as a service, kind of similar to Amazon AWS in the types of functionality. And so that's what we started doing in the middle of 2010. And while we were doing that, we decided we were building we were reusing as much as we could out of open source. But there were a few things that we couldn't find off the shelf or we couldn't really easily integrate. And one of them was the virtualized networking services. Now, this is before anybody was talking about SDN and such. And frankly, I don't really like that term because it's a bit non-descriptive. It's just a bit broad. So what our company provides is virtual networking services for the infrastructure as a service cloud. So you have virtualized compute, virtualized storage, and then various network services like switching, routing, firewall, load balancing, et cetera, that need to be available in that kind of multi-tenant environment. We build that software layer. So fast forward a little bit, our initial business idea did not actually work out. And so we decided to focus on the software stack instead. and
So
build a
anybody
software
heard of a
product.
Silicon Valley company that ended up doing something different than they thought they were going to do at the outset?
Yeah, right.
Same scenario plays out just as often in Japan.
Well, I don't even know anything about that. I can only speak about our specific situation. But yeah, so we decided to change the software. And I think that shift was fairly successful. And since then, the whole infrastructure space actually has taken off. There's a lot more interest in it because cloud computing is becoming much bigger. Private clouds are becoming all hot. The OpenStack project, which some of you may be familiar with, started in 2010. That's an open source project started by Rackspace to provide like the core of what it takes to build a virtualized compute storage networking environment like Amazon AWS, either on premises or as a public cloud. So we joined that as well, and so our product works with OpenStack and with other open cloud management platforms.
So what are a couple of the key technical issues or technical problems in current approaches to data center or network management that you and companies like you address? And then what are some of the business justification or the business issues that make people consider looking at something like you?
Right. So, I mean, just from the user's perspective, what is the user trying to get out of this? They're trying to get virtualized, services, compute services in the form of virtual machines, virtualized storage services like virtual disks and such, and then the networking services that interconnect all these things. And traditional networking hardware is not designed really for this kind of multi-tenant environment. I mean, there are some primitives in there like VLANs, virtual LANs for isolation, Ethernet. Those are just not appropriate as primitives in this kind of environment. They don't scale. They're not fault tolerant. There's a variety of reasons why that's not the right way to build the networking services in a very dynamic environment like this type of cloud computing. And it's not just the Ethernet. It's also the routing and the load balancing. They're not scalable. They're not fault tolerant. So all of these things kind of have to be rebuilt, frankly speaking, from scratch in that kind of environment. Yes, it's possible to take a bunch of traditional devices and cobble them together, but it's probably not going to work very well when you try to scale it out or to manage it.
So when you initially started the company, the data center firm gave you some money to build a system for them. Initially, that was kind of your seed capital. Yep. How did you go about raising the money? In my case, I know it was a global team was what attracted me. But when did you kind of shift to being a more broad software play, and how easy or difficult was it for you to get the initial capital to shift from being a service provider to a software creator?
Well, I think, raising capital was hard. It was very hard. And I think that's actually one of the, as you probably know very well, it's one of the really hardest things about doing this type of high-risk, high-reward business in Japan. Because most of the local VC firms are not that risk, they don't have such a high appetite for risk. Mm-hmm. So our initial couple of $1 million of capital were from strategic investors, including BitIsle, the data center company, and NTT, who, they have a broad interest in networking and network virtualization. And then after that came our Series A, which was relatively recent. It was just a couple of months ago. Mm-hmm. So it was actually quite a long span between when we got our seed capital and when we raised our Series A. And I think a couple of things contributed to successfully raising the Series A was that we had actually built the product and we actually gotten traction, which was definitely not the case, back when we got the initial money. And we grew the company very slowly. When you invested in us, I think it was like in 2011.
Late 2011.
And it was like we had 7 people. Now we have 27 people. Yeah. But that's relatively slow by Silicon Valley growth standards. I think in our case it was actually fine because the market wasn't there before, and now it's kind of coming into reality. So if we had grown faster earlier, we would have burned money a bit unnecessarily, I think. Yep. But like I said, we did grow very slowly. And part of it was because we didn't have the cash, and part of it was because it was really difficult to hire the right people at that time. Now it's actually gotten a lot easier. So that's an interesting aspect of doing the business as we became more well known.
Well, I'm sure that along the way, I kind of pushed you to open a center in Silicon Valley, try and raise money here, because I believed that you would not be able to get $5 or $10 million in capital in Japan. You had to do it here. Could you talk a little bit about your experience and whether you think your experience trying to raise money in the Valley was different than Silicon Valley startups of a similar size and stage, or how did that process work, and why do you think in the end you weren't able to raise money in the Valley, and then yet you were able to raise a surprisingly large amount back in Japan? So talk a little bit about where you were as a company, and whether or not, in retrospect, was there anything useful that you gained out of trying to raise money here? And do you have a sense that there's a chance that you would ever be able to raise money here as a Japanese company? Or
Right. That's a good question. To be perfectly honest, I don't think we ever really tried very hard to raise the money here.
Okay.
I know you pushed us, and we did open an office in San Francisco, and we have a team over here at this point, because realistically, for a variety of reasons, not just money, but we have to be plugged into the ecosystem of partner companies and potential customers in the area here. But I would say, we never really tried to raise money here that hard. But going through the process, going through the roadshow that we did together, it was very useful, because the VCs here were much more critical, I think, of a variety of things, of the product, of the market, and of the team, lots of things. So that did help, I think, to sharpen certainly our presentation skills, and to a certain extent our focus of the product and the market. And that was, I think, when was that? That was like a year and a half ago? A year ago. And so in the end, we kind of gave up on it, basically. We weren't going that way, and at the same time we were pursuing capital from our Japanese investors, and that ended up coming through. But I think it was actually interesting, because working to raise money in the Valley was kind of what pushed them over the edge as well to invest, because there was interest from the Silicon Valley capital enough that it would influence them. My feeling was that they needed to have some kind of external validation. They needed to have somebody tell them, like, this is okay, and then they were ready to take the risk.
Let's shift a little bit, talk about kind of the organization. You've got an interesting mixture of people from different countries in Tokyo. You've got, as a just 27-person company, you've got 3 locations internationally.
Right.
What are you finding about how easy or hard it is to recruit the quality of talent that you've been able to recruit in Tokyo versus, say, the people you were working with at Amazon or people you've worked with in the United States? What's your sense of the talent pool, and what are some things that you watch for as a founder and CEO when you're hiring, recruiting, and kind of building your team? So,
I can
landscape.
I can talk broadly about how it was to hire our team in Tokyo. First of all, there are 35 million people in the metro area. There's tons of talent. Around. Most of it, though, is locked up in very large corporations, and they don't want to come out, or they don't know that they can, in terms of those Japanese engineers. And I think a lot of people would have a hard time because of the language issues as well. But, I don't want to broadly generalize there. But for us, for our company, we built an excellent team, I think, in Tokyo. Absolutely rivaling any kind of local company here in the Valley. That said, some of the domain expertise isn't quite there, at least not accessible to us. For instance, we don't have anybody. Well, we have one guy who worked at Cisco who's actually in Tokyo, but not. Here we could get 50 guys from Cisco to up and quit and come join us. So it's a little harder to access the talent. So we had to use headhunters and recruiters a lot more than we would have here. Our personal networks could only
So
go
have you
so
been
far.
able to pull talent from some of the big established companies?
A bit, like from NEC and from any NTT we did.
Well,
And some from smaller companies. I think the team is good. It's good enough. Like I said, there is enough of a human capital base there, more than enough, to build your team, whatever you're trying to do. And surprisingly large numbers of foreigners as well. Americans, Europeans, etc.
so all those questions are kind of leading. There may be some other factors to consider, all kind of leading up to the big question that I always like to talk about when I have a chance here at Stanford is, if you were doing it all over again, do you think you'd have a better shot at ultimately being successful starting from day one in the Valley where you're surrounded by other competitors? Or do you think you would deliberately choose to start it in Tokyo again, or maybe your home country or somewhere in Europe? So what's your sense of how easy, the pros and cons of trying to do a startup outside the Valley versus in the Valley, from what you're experienced up to this point?
I think it really is a double-edged sword, being in the Valley or not being in the Valley. First of all, I did not have any strong personal network in the Valley when starting this company.
Okay.
So I would have had to live here for years, in order to build that up and come here. And I think
So in your case, there was largely driven by personal network choice. So it's the same for me with SunBridge.
Exactly.
After 10 years doing Oracle in Japan,
Right.
to start doing startup investing didn't make a lot of sense for me to do it here because even though it was Oracle,
Right.
it was Oracle in Tokyo.
Right.
So my network was there. as well.
Paradoxically,
So
I
that
actually
makes
had a
sense.
better network to VCs
To do
and investors in Tokyo,
than in
here.
the Valley.
So
Okay.
that's just my personal weirdness, a weird situation in that sense. But
What's your sense if you were to generalize though?
I think it's really, like all the mechanics of, starting a company and getting things together, it's all very easy over there. Very simple. Actually, getting visas for foreign workers, trivial compared to the United States.
Yeah.
Really, it's like, it's amazing. That said, there are lots of other barriers, to getting people to actually go over there to work there. It's the hidden barriers, right? Like language and some sort of aversion to being there. I think it's a great place. More people should go there, start companies and live there and try it out. But that doesn't really happen in reality, not right now. I think people are, our employees, they're very loyal. There's a lot less jumping around, so I don't think you have to worry about people going to your competitors and things like that, if that is a concern. But
But do you have any competitors locally in Japan that are local grown?
Actually, we do. Yeah, there is
Okay.
one. It's
You've never told me about them on the board meetings.
Really? Yes, I did. No,
who's that?
it's a company called Stratosphere.
Okay.
It's the joint venture between IIJ and IP Infusion.
Okay. Yeah.
They're actually very good, I
I
think,
take it
technically.
back. I take it back.
Yeah, they're actually very good technically, I think, but they haven't. They have an extremely locally focused marketing.
Okay. How many people would you broadly say are competitors that originate here in the Valley, maybe Boston? So
Yeah, 3 or 4 basically.
Okay,
all
so-
here in the Valley.
so you're
in our space.
So having one other competitor in Tokyo,
Yeah.
you're like 2 out of 5 or 6, maybe globally.
Yeah.
Interesting.
But I would say, like in the market that we're targeting, which is let's say private clouds being built on OpenStack or CloudStack, this type of system. I don't want to like pat ourselves on the back, but I think we're a player. We're one of the top 3 players in that space.
Well, always on.
And,
I think so.
If
So do I.
if they know something,
Yeah.
I think we are, and I think it's kind of amazing, that we were able to build that without having been here the whole time. So ultimately, I was always very worried. I started off as the CTO. My Japanese partner was the CEO, and we decided to change roles. But my concern was always that I always had this kind of inferiority complex and concern that we're lacking the right talent. We're making all kinds of mistakes, etc. And where we've gotten to right now, I think we've gotten to a pretty reasonable place, for our stage. And frankly speaking, we spent far less money than our competitors so far. About $5.5 million to get to this point.
Yeah. Well, I remember in reviewing the feedback from the Silicon VCs, you'd mentioned that several of them had said they were astonished at how much software you'd been able to build with the small amount of capital that you had to use. which
Yeah, because we don't have to pay ourselves, $200,000
a year
yeah. to work there.
Yeah. Yeah. Next line of thought has just slipped my mind. So where in terms of commercial rollout or user adoption do you think this shift to more dynamically definable virtual networking, where you had to use to pull and plug wires, you mentioned to me in the meeting, to really do fundamental load balancing, to where Amazon today and their internal systems is like allowing you to dynamically move data around from one physical location to a completely different physical location. So where are we in terms of adoption of the technology beyond just the Amazons and Googles that build it in-house?
Right.
And is this something that ever moves beyond a few data center service providers to being kind of take a stab at is this category really potentially a Microsoft to Cisco sort of play, or is it more
actually, just in terms of the market, there's a lot of fascinating stuff going on right now. So basically, yes, this category is going to be huge, and who's going to be able to win it, is definitely an open question. Not in terms of us versus one of our other startup competitors, but in terms of the juggernauts, VMware, Microsoft, and Amazon versus kind of everybody else, in that sense. So right now, the movement basically seems to be a lot of, I don't know if you may be familiar with this, but since Amazon started, there's been this movement in the enterprise, shadow IT, people are calling it, where basically internal IT departments are so incompetent, that the users actually just go straight to Amazon and use their compute and whatnot, their services. And so at some point, the corporations, they get mad, they want to pull that stuff back in, the IT departments want to change, or they're forced to change. And so now they have to adopt these agile practices and provide the same kind of services. Practically speaking, in fact, they have to provide the exact same service, as Amazon, because the users are used to that now. So that's driving the need for the type of private cloud software that OpenStack, CloudStack, and other stacks like this are offering, that type of functionality, and other associated services like the networking services, storage services, and such. So yes, it's definitely a very real market. It's going to happen. That said, VMware, who is kind of king of virtualization in the enterprise, but not so much cloud, there's a difference there. They've got a strategy, and it's very interesting. Their strategy is they're going to build their own public cloud, and then make this kind of experience of using the internal compute resources and the ones in their cloud be seamless. That's their pitch. It's very recent, actually. I think they just announced that yesterday. So at the same time, they don't know anything about operating a service, relatively speaking, right? Like they provide software. So who knows about operating services? It's Amazon and Microsoft. They're quite big and quite competent, and to a certain extent, Rackspace and other second-tier cloud providers. Hope nobody from Rackspace is here, but so I think that Microsoft could execute a similar strategy, as VMware is, with this hybrid model. Amazon, they're very good at service, not so much at product, at shipping a product. So we'll see how that goes. And then there is the entire ecosystem of the open players, like the OpenStack movement, which is not so much a product, but it is like an alternative architecture and technology, which is actually being pushed by Rackspace. I think that actually has a big chance to be a contender, because all the world's largest telco companies, they're looking desperately for new sources of revenue. So one of the things they want to get into is providing compute services to complement all their network services. And so it seems like they're being pushed in the direction of going with OpenStack and banding together to sort of provide an alternative to all this. So it's a lot of dynamic stuff going on in the market. It's very interesting.
So there's a question we've talked about a little bit internally, and this, you're just mentioning OpenStack now, reminded me of a conversation that went on at TiCon last Friday, I think was the session. And there was a lot of debate about whether Hadoop needed to remain a pure open source, non-commercial environment in order to keep innovating and growing, or whether Intel and other companies who are adding, support and proprietary things around that environment, if that creating a proprietary environment for the cloud computing infrastructure was the way that the industry had. So you kind of had the Intel and IBM on one side saying, well, you've got to have some professional services and more structure around it, and the hacker community on the other side saying, well, if we go down that path, we'll kill it, just like we did AT&T and BSD Unix back in the 90s, and ended up with a lot of conflicting things. So any read on how the virtual networking, open source, open stack versus commercial product thing is going to be coexistent? So that you think it's likely to orient toward one direction or the other?
Well, my view, and from my somewhat limited experience, I think that in order for the majority of customers and companies to consume this stuff, it does have to be productized, and that means that it has to have a lot of services around it initially. It has to have support. It cannot be like the current state of OpenStack, which is, toss it over the wall, pick it up, and then good luck to you. There are very few organizations that can actually handle that internally. Like, count them on your fingers, So now Red Hat, they've gotten into the OpenStack game. They've quickly actually become the largest contributor to the open source project. And we're working with them as well. And they're going to provide an actual product which hopefully is going to be very good and well supported. That's going to be much more consumable for the vast majority of enterprises, just like Linux. I mean, who could use Linux before Red Hat provided it, as a product? Very few organizations could do that by themselves. Even when I was at Amazon, which was in 2006, 2007, 2004 to 2007, they were using Red Hat Enterprise Linux because they needed the support at some level. And that's Amazon, it's not some auto parts company, building a cloud. So I think that absolutely there's still quite a long way to go before this stuff is product worthy, which is why VMware has a huge head start, frankly speaking, right? Because they know how to make a product and deliver it. But it's all very dynamic right now, very up in the air.
I'm going to pause for just a second and see if there's some questions from the audience that might take conversation. I'm realizing now that the conversation has been rather technical on the software-defined networking space that may be interesting to people in the room, but maybe not the most. So I'm going to take a couple of audience questions and see if we pull out sort of a new direction that you might like to take this fireside chat. So we'll start with you and then you.
So with 27 people right now, what is your vision and what is your strategies on building a support team to move it forward?
A support team. That's a great question, because we've been extremely engineering focused until fairly recently. So we just built a support team. So we have some customers in Japan which need local support, and we have to have people there. We also have to do support in the U.S. And so we actually have to do, for things like marketing, sales, and support, we have to kind of build two separate teams. I mean, it's a little hard to leverage the same resources, the same people to do both.
Yeah.
We've been trying to do that, somewhat unsuccessfully, to be honest.
They're right now just going through that transition.
Yes.
They've gone from alpha development and a few prototypes. Do they now have two commercial clients?
That's a little. It's a little further along than that,
But they now have customers paying and
having the support is. Yeah, like I said, we tried to do everything in sort of the way that we were used to working. Didn't work out so well so far, So, we're.
Yeah. So we're at the stage where they have to address that question. Yes.
So my question is basically, how do you find clients? So I know that you're a company that's based in Japan. You're also you're one of a few companies. How exactly do you find clients? Is it all just through connections? And is there a name enough already that they come in already like that?
Well, the market is very niche. Within the niche of this cloud computing infrastructure, virtual networking, I think our name is well known enough. So in the US, a lot of the clients we find through the community of OpenStack, soon CloudStack, and the Red Hat Partner Network, which we're going to be going to in think in June.
You've been coming to and presenting at the events here even before you had the office in San Francisco, haven't you?
A little bit. I mean, we were. I think the OpenStack community was really important for getting our name out there and being connected to the right types of companies, because the ones that are interested in building their own infrastructure, cloud infrastructure, they were also going to those events. Absolutely. In Japan, it's much easier because we're in Tokyo. Japan's a big country,
Most of the
but
customers are in
everything is there. You know, so through our network, we can access probably like at least half the customers in the whole country. You know, in Tokyo. So quite different in that sense. Yeah, and that's all we've done so far. You know, the U.S. or broadly speaking, the OpenStack community, which does include some companies from Europe and of course Asia too, and in Japan.
I was wondering, why did you pick Barcelona over a more high-tech country in Europe like Ireland or Germany?
That's a great question. It's purely coincidental. One of my old friends and colleagues from Amazon, after leaving Amazon, he moved there. Was doing something completely different, and when he started working with our company, he wanted to stay. So, you know, he had become such a critical part of the team that I couldn't say no.
But how's it working out? What are you finding to be the advantages of that versus?
You know, it's pure engineering right now over there, and we've done no business development or sales in Europe. So so far, all I can say is that very good engineers. You know, absolutely. Which I think, you know, going back to what we said earlier, there are good engineers all over the place. You know, all over the world. It's just a question of finding them. That's the harder part. Here in the Valley, they're very concentrated, and people are networking and talking to each other. Whereas in other places, they tend to be more like trapped in the big companies, and it takes more work to find them.
There was a question in the back.
You alluded to the open source communities, especially in SDN space. Do you see that as a barrier for new startup coming up doing proprietary product, or kind of forcing the company to do more of a service product?
Oh, that's a great question. I mean, yeah, a lot of people tell us all the time that software is the cost of software is tending towards zero, you know, and that we better switch to a service company model. And frankly, I don't believe that. I mean, there's enough value to be added and enough complexity that will not be solved in the open source community for quite a while. I mean, there's a lot of open source stuff out there, absolutely, but it's very not productized, you know. If you're Google, yes, you can go and grab a bunch of stuff and put it together, or Amazon. If you're not a high-tech company, no way.
Does it present a barrier
for new
startups to try to productize a proprietary solution?
Is it, or is it a jump start?
In our space, there is some stuff there that can be leveraged, you know, to jumpstart. I have to be honest. Occasionally, we did receive pushback from certain customers in the OpenStack community saying, "I don't want to pay for this. You know, I'm going to go do my own thing." But not many. Very few. Very few.
Dan, I remember years ago when Scott McNeely talked about cloud computing, and of course this was B2C inference.
Okay.
And his claim was very simple. It was, nobody cares about where your toast comes from, just that your toaster works.
Yep.
Okay. And what kind of barriers have you found that are non-technical, maybe more on the emotional or psychological side with your corporate clients to this, or has it been embraced? And Alan, the local VC in the U.S., last I checked, I think it's roughly about $25 billion a year invested. And that number maybe is plus or minus $5 billion,
nationwide.
roughly, something like that. What's the community like in Japan? And do you have the equivalent of like a Sand Hill Road in Menlo Park there, where VCs are kind of physically located?
Yes, you were talking about, you know, the sort of emotional barriers to adoption of this type of new technology. Some of them might be a little obvious. You know, for example, when the internal IT departments are going to be changing to automate everything, you know, people are kind of worried about losing control, let's say, especially in networking teams. Actually, I've seen this only in some companies, like at Amazon. There's a separate team for managing all the networking. Now, if all the infrastructure, almost all the infrastructure is virtualized, that team becomes smaller, you know, honestly. or its function has to change somewhat. So yes, there's definitely resistance to some of the new aspects of doing this this networking. I wouldn't call our product a networking product per se, because we're not replacing like the Cisco switch. It's a piece of software, that's part of the virtualized computing environment, in my view. But it's not seen as such always. It's seen as a bit of a threat.
What about security? Any issues there?
Any issues in security? Well, frankly speaking, yes. I mean, the enterprise has way different security than the Amazon AWS cloud, right, in that sense. But I think that largely, well, to a great extent, the customers have gotten used to that model of what they get on Amazon, which is not much, in the way of security, and therefore they have to work around that or build it into the application rather than relying on network appliances and such. So yeah, we did get a lot of that kind of pushback maybe a year or 2 years ago, which was, can I still use my firewall appliance from such and such a vendor that's doing something super specific? But we're not hearing a lot of that anymore. So I think that the mind shift has happened to some extent. Yep.
Total VC investment in Japan was about $2 billion a year, steady from the early 90s till the late basically until 2008. And in 2008, the Japanese version of the SOX law kicked in and caused a plummeting in the number of IPOs that happened for a couple of years. And the Lehman shock happened, and the economy, which had been growing for 3 or 4 years, kind of hit a roadblock. And in 2009, the total VC invested dropped down to about $1 billion, and it's just creeping up now. It's back up to about $1.4 billion. But in Japan, there is one government-associated fund, INCJ, which also has about $1 billion to invest. So there's about $1 billion and a quarter in total annual investment by the entire VC community, and then about another $1 billion to be deployed in government-backed, government-run fund. And in a nutshell, my view is that the U.S. is overfunded, and because it's overfunded, that's part of the reason why the large VC firms don't invest in Series A deals anymore, because the partners have gotten accustomed to this idea that they're each responsible for managing $50 or $100 million, and they can only do an effective job working with 5 to 6 companies at a time. So they have these big bite sizes, and a startup can't absorb $20 million efficiently unless you're in semiconductors or capital intensive, which the VCs don't want to invest anymore. So you've got this weird dilemma going on of wanting to invest in capital light companies, but invest a lot of capital in them. And so the only way you can do that productively is waiting until the company's pretty well established and you're investing in a major growth expansion funding to hire a large organization ahead of the opportunity. So the fact that there is so much money in VC in the US, I think, is part of the problem here, and part of why it's so hard to get the Series A funding in American Valley. And on the other hand, the Japanese, the professional VCs will invest $300,000-$500,000 a pop in a relatively young company, but it's really hard to raise $5 or $10 million as a private company in Japan. So you have this inverse situation where the financial industry, institutional VCs in Japan will do seed stage, really early, small A investing, but after $2 or $3 million in VC financing in Japan, typically the next step is get to operating profitability, grow to $10 or $15 million, and take the company public. So there's a really weak follow-on ecosystem in Japan. As to the question about Sand Hill Road, Tokyo itself, as Jan said, is such a huge proportion of the Japanese economy. And within the Yamanote line, basically you can get anywhere within that line in a 30-minute train ride. So central Tokyo is where all the VCs are, and if there is a concentration, there's a concentration of the financial institutional VCs around Tokyo Station, because that's where the banks and insurance companies and investment bankers all had their headquarters. So there is sort of a cluster of VC offices there. But rather than startups going to the VCs, in Tokyo, the VCs tend to go to the startups. it's almost like the VCs are selling to startups on take our money, not somebody else's. So there's a weird job in institutional VCs in Japan for new college grads, particularly in the big firms like JAFCO and JIKE, who open the Nikkei newspaper every morning, and if they read about some company that they've never heard of, they try to be the first person in the company to go out and contact them and say, when you need some money, talk to us. And they actually get rewarded for making the investments, for finding companies and making the investments rather than on the back end. And it's because, as an industry, the Japanese financial VCs tend to think of it as a portfolio investing strategy to spread a lot of money over a lot of opportunities, and they seem to have absorbed, most of them, the efficient market theory approach to investing, and they're applying that to startups, which from a Silicon Valley it's absurd, but that's kind of the background and the training that a lot of them bring to it. And then there are a handful of people that are approaching from an entrepreneurial or investor background. And recently there are a number of angels and VCs that have been started by people who were involved in creating internet companies around 2000, 2001, but it's still a very small portion of the industry. So it was very, very inverted VC. I think you were next, and then you.
For Dan, I noticed that your background is sort of primarily technology focused. And, yeah. Can you talk a little bit about some of the challenges, if any, that you've had sort of moving from that hat to the CEO hat, which is generally
I can
more
because it's extremely recent, so it's fresh in my mind.
Yeah.
I mean, one of the things that I have had an awakening about is just what it means to have a product, and what the quality of the product has to be, to really be competitive and sell it. Because before I was just focused so much on technology itself and actually, to be frank, the other thing is I have not worked on any kind of shippable software product, shrink wrap
it's all internal technology.
Services, a lot of services. And the way that I was just talking to my friend about that, when you operate a service, you do things very differently than when you're actually shrink wrapping it and shipping it to the customer and having to support it as externally. And the other thing is just thinking more strategically, delegating a lot more. I always tend to do everything, myself, hands-on. Thinking about revaluing some of the other competencies in the company besides engineering, which was again, where I was mostly focusing on. So before I was thinking, marketing guy, what a waste of money. I know it sounds funny, but but in all seriousness,
I don't think I've met many engineers in my life that instinctively say otherwise. There's a logical overlay you have to put over your engineering think to accept that marketing might have some.
No, I totally see it now. I mean, there's so many of these, marketing and product management and product development and sales, hugely important, and I've done a lot of refocusing, of the team in the last couple of months. Yeah, so it's a big mind shift. I actually think I'm going through it at a reasonable pace, but actually an interesting awakening.
I have a three-part question. The first part is, what are your sales? Secondly, who are your primary sources for those sales? And thirdly, what market share do you hold now versus what you hope to hold someday in the future as terms of how the market is going to grow?
Okay, well, I'll be perfectly frank. The whole market doesn't really exist yet, practically speaking. There are a couple of us startups in the game. Most of the projects are at POC stage, proof of concept. We get paid for those. People are trying out dev and test deploy environments internally. I have no idea what our market share is. We have 2 real paying customers and a bunch of other that we have actual contracts with long term, and a bunch of POCs in the works. We're getting these from some service providers in Japan. So existing cloud service providers are providing this virtualized compute environment. They want to upgrade their infrastructure, and they're looking at this type of product. Private clouds being built in some other companies, and telcos. That's one of the other big areas right now. And they are, all the telcos so far that we work with are at the POC stage.
So you actually have revenue?
Yes, we have.
Can you reveal what that is?
We've had millions of dollars of revenue, but I can't say that it's really steady enough to call it like, sustainable so far.
So it's, like I said, the whole industry right now is there's a lot of paid proof of concept work going on.
Very basic.
Yep.
Please.
Yeah, I just wanted to give a couple comments from more of a employee at a startup's perspective. And maybe I might have been a bit spoiled by first working in Silicon Valley as an engineer at a startup before spending time in Japan. And this comes from more 2007, 2010 time period, so things might have changed a little bit. But personally, when I talk
do a little bit, I think Richard knows who you are and wanted you to tell us, but give just a brief.
Yeah, so I took Richard's class a long time ago, Stanford, CS, lived in Tokyo for about 8 years, and then came back to the Bay Area about a few years ago, and now our company, Ice Identity, is sponsoring this seminar, and so now I'm helping them find partners in Silicon Valley.
Okay.
But at the end of my time in Japan, I spent a few years kind of looking for other alternatives, maybe thinking about working for a startup in Japan. And I had some interesting experiences comparing it to startups, here in the Valley. First of all, the pay for engineers in Japan tends to be, very low. The stock, it's hard to get stock just due to the laws being different. The chances of your stock options being worth something are also, I found a bit lower. And then in some cases too, I met one company, for instance, that was maybe about, I guess, 20 people or so, and they were more internet. They were making an ad server, and when I started asking them the same types of kind of due diligence questions that employees would ask a venture here, like, oh, who are your investors? How much money did you get? What are your risks? They actually took it personally. They're like, no, you're just a lowly employee. We don't reveal that to you. You're not an investor. The guy actually got really worked up about it and was like, how dare you ask us these sensitive questions, kind of thing. And just kind of like, I was like, well, why would I put up with all this? I might as well just go back to the Valley and work for a startup there rather than put up with all these things I was running into. I don't want to sound too pessimistic, but it just kind of, at that point, it seemed like it was like, maybe we're just spoiled in Silicon Valley, but it seemed a bit hard. So that was one of the reasons kind of why I decided, well, I'm going to move back to the US for a while, in my case. But it might have just been the companies I was talking to.
Well, I mean, you as in you all, are very spoiled in Silicon Valley. Certainly in terms of pay. I mean, it's outrageous. It's outrageous, right? Like the inflation in here. There's like a local inflation going on, which is crazy. Absolutely. Engineer salaries in Japan are not the same as here. They're probably like, I don't know, half to 2/3, let's say. But that's actually a very reasonable amount of money to live in Tokyo, which is, by the way, not the world's most expensive city. Everybody thinks that, but it's actually more reasonable than San Francisco by a long shot. And in terms of, I think some of the other points that you addressed, that you made are really good. For instance, the very big gap between management and employees. I mean, I'm sure Alec can talk about that much more than me, which we don't have, by the way, in our company at all. Stock options, we did exactly Silicon Valley style stock options, which you can't do exactly in the Japanese system, but I think, so by the way, actually our company, we incorporated outside of Japan. One of the reasons was for that. So we have flexibility of the stock options. Actually, the only thing that really sucks about the Japanese stock options is that you can't set the vesting term. It's like 2 years fixed, right?
No, you can do it. You can set vesting. What you can't do, which is kind of annoying, is you can't create a pool that exists forever until it's used up.
Right.
You have to authorize each
Every
year
single-
at the shareholders meeting a fresh set of options to be used in that year.
Okay.
So it's structurally a nuisance. You work around it, but
Right.
you can do any of the vesting
Right.
schemes.
And some other stuff. I mean, mostly I think it can be done. It's just that.
But I think your characterization is probably more typical of a typical Japanese startup. And we were, when we started SunBridge, trying to get some more of this aggressive use of stock options and kind of Silicon Valley thing. I'm not sure that we were trying to push for higher salaries. Because there certainly is not basically the salaries are supported by this excess of venture capital that exists and is managed out of the valley, and there's a tendency to want to invest it locally. And so you get this kind of weird venture capital bubble that exists here. But I think your experience is quite typical of the way you described it, of the culture in a startup in Silicon Valley. And so listening to it made me want to ask the question, so it can be done differently. It's very rare to find a company like Midokura that does it as differently from the standard practices in Japan as they do. But given you had your personal connections to Japan, what are some of the reasons that you're choosing to forego maybe the immediate financial rewards of working? You'd probably be making more money working in a startup in Silicon Valley than you are running one in Japan. So what's sort of the personal thing that makes someone like you or I choose to work in Japan, do you think, versus the financial draw of coming back in the Valley? What are the trade-offs that are making you stay in Tokyo and do this there?
I strongly prefer living there, personally, frankly
Simple,
speaking.
yeah.
That's one aspect. I don't like driving, so that kind of rules out all of the Valley. But no, I mean, I think it's perfectly possible to succeed, And initially, to be honest, like when we met before, we were at a much earlier stage, and I was just kind of having fun with it. Now I'm feeling extremely responsible to continue it and make it succeed,
Yeah.
And that's what it is. We're gonna do it. I don't think it matters, where the bulk of our engineering team is or such.
Yeah. I'm gonna end with, I think we're supposed to wrap up at 5:30. I'm gonna end with one last question, sort of your vision, your definition of success. What for yourself personally and for the company? How are you characterizing success today, or the kind of the end game, the end goal for what you're trying to accomplish here?
Well, I think very simply to build and deliver a product that the customers will use and gain a lot of value from. Whether I'm not going to talk about the financial success of revenue or IPO or getting acquired or such. Those are all possible options. But at the end, it's all about building something and delivering something that is useful. That is my definition of success.
And then you will be able to achieve it.
Yes, absolutely.
Thank you. There were a couple of themes that I picked up along the way that rang true to my own experience, and I would imagine to many of yours, and that is we generally tend to end up being the most successful and engaged and effective in places that draw on our natural talents and our natural network of relationships. And some of the worst startups that I've seen were the best business plans. Someone sitting there, my favorite story was there was a guy who was a male product manager in Microsoft in Seattle who had visited Japan on business trips a few times, who came to me in the peak of the internet bubble with a proposal for a women's portal, a Japanese women's portal, and had absolutely no connection to anything except that the analysis on this being a supremely attractive market segment globally was, so the plan was exquisite. The fit between that plan and him as the person to execute it, there was absolutely no connection, and not surprisingly, the business never actually got started. So I think one thing I heard a couple of times from Dan is he's in Japan because that's where his network is and that's where he likes to be. And then the last comment on, in the end, success, whether as an entrepreneur, as an employee working in a firm of any size, in whatever industry we're in, that at the end of the day, doing something, creating something that's valuable for your peers, for your colleagues, for customers, for the world at large. That's what ultimately is what it's all about. And if you can do that, whatever methods or approaches or teams that you bring together to do that, ultimately That's the goal that I think we're all shooting for. And so it was good to be able to reconfirm that I invested in a company run by a very well-grounded CEO who is going through that very challenging transition right now from being an engineer and a very good manager of engineers and a very good architect and technology strategist to growing into the much broader role of a CEO. It's been a really fun couple of years watching Dan and the company get off the ground, and I'm looking forward to seeing how this whole landscape plays out. And I really do expect them to be one of the first companies started in Japan in a hardcore technology to really become a viable, credible competitor internationally. So it's a company to watch. Thank you all for coming today, and it's a pleasure to talk to you.
Thank you.